Most of us start investing as soon as we start earning some money, but give up even before getting started, not knowing where to start and how to start. And we often end up confusing ourselves with all the financial terms that are out there. Hey guys, this is Pravik, and I am a final year student at BITS Pilani Hyderabad campus and an intern at Morgan Stanley. And in this video, I want to talk about the 5 basic and important financial terms that you'll come across if you want to get started with investing in the stock markets. Let's get started. So yes, stock markets is all about stocks. But what are stocks exactly? In simple terms, a stock is a part of ownership in the company. So when you buy a stock of a company, it means now you own a part of that company. And of course, that part is going to be very small percentage. And that percentage is going to depend upon the number of shares you buy. And for you to buy a stock of a company, the company must be listed on the stock exchange. Talking about stock exchanges, that brings me to point number 2. What is a stock exchange exactly? A stock exchange is a place where investors like us and brokers exchange their stocks at. So in India, we have 2 major stock exchanges, the Bombay Stock Exchange and the National Stock Exchange. In short, they are referred to as BSE and NSE, and both of them are located in Mumbai. So if you are thinking you need to go to Mumbai to buy or sell a stock every time, no, that's not how it happens. Like I said, to be able to trade a stock of a company, it must be listed on the stock exchange. But that doesn't mean you simply visit the stock exchange and buy the stocks from them. It doesn't happen like that. Usually the transactions with the stock exchanges are limited to brokers only. So the brokers will buy it from the stock exchange and they'll in turn sell it to you. That's how it's done. So if you want to buy a stock of a company, you need to buy it from the brokers, and for that you need to have a brokerage account with these brokers. So in India we have these huge brokers like Zerodha, Upstocks and Grow, which will let you buy stocks from them. And thanks to these brokers, you can now trade stocks online at the comfort of your home. Moving on, we have the third one, the primary markets and secondary markets. Now, understanding the difference between primary markets and the secondary markets is very simple, but it is very crucial, because investors need to know the place where they need to buy their stocks from. So primary markets is the place where the company going public will issue their bonds and shares to the public for the first time. So if you've heard about IPOs, this is the place where IPOs are issued to the public. So by the way, IPO stands for initial public offering, and more on IPOs in another video. So when a company goes public, primary markets is the place where they issue their shares to the public. And the main reason why companies go public is because of the requirement of the long-term funds for their projects. So when these issued shares are bought by the investors and they decide to sell them back, secondary markets come into picture. So secondary markets is the place where the already issued shares bought by the investors are sold and bought by other investors. So whatever shares you trade through your broker, it usually happens in the secondary markets by default, unless you are specifically applying for an IPO. Moving on, we have the stock market index. Now understanding what stock market index is perhaps the most important one if you want to get started with investing in the stock markets. So what exactly is a stock market index? Stock market index is an index which helps to track the performance of the stock markets. It is widely used by investors to compare the performance of the companies with that of the stock market as a whole. So in India, we have 2 major stock indices. One is Sensex and the other one is Nifty 50. Sensex tracks the largest 30 Indian companies that are listed on the Bombay Stock Exchange, whereas Nifty 50 tracks the top 50 Indian companies that are listed on the National Stock Exchange. And whenever you hear someone saying that they've invested in the stock markets, unless they are specifically talking about a specific company in the stock market, it usually means either of these 2 things. That is, they have either invested in a mutual fund that tracks these index, or they have invested in a special fund or a fund which tracks the stock market index, which are very commonly referred to as the ETFs or the exchange traded funds. These funds try their best to replicate the stock market index, but no matter how accurate they try to be, there will always be a lag between them, which is referred to as the tracking error. So the last one that I have for you in this video is dividends. So dividends is a very popular way for investors to make some extra side income. So very huge companies, very successful companies with huge profits, roll out a certain percentage of their profits as a dividends to the shareholders. But why do they do it? They do it just as a way to thank their shareholder for believing and investing in the company. But the point to note here is that full profits will not be distributed as a dividends. It is only a certain percentage of the profits that will be distributed. And now this percentage can vary every financial year. Most companies will continue to pay the dividends regularly, but it is not an obligation or a rule or any law. It is a decision left to the company's board of directors, and usually a voting happens for the shareholders for their approval. So that is it for this video. I hope this video helped you understand the basic financial terms that you'll come across if you want to get started with investing. So these in no way are the only important terms that you need to understand. As you become more experienced with stock markets, you need to understand more about it. You need to learn more advanced stuff. As with any other thing in life, the more deeper you want to dive into something, the more you need to understand and learn about it first. The same applies to stock markets as well. So I hope I helped you with this one. So thanks for watching it till the end. And if you have liked this video, please hit the like button and consider subscribing to this channel if you want more such content. It would mean a lot to me. So thank you, and I'll see you in the next one. Bye.